What's going on, YouTube fam? This is the Wealth Investing Network. We do this for the win. Today, we're talking about Tesla stock. They reported earnings yesterday. Over today, they're down about 12%, and probably a little bit worse than that in these after hours. I was going to wait about a week to do this, but I got to give you the content now. So if you like this kind of content, please hit that like button, all the buttons, subscribe, do those things. Obviously, over their full history, Tesla has performed very well. Even in the last 5 years, they performed very well. But the past year, they've had some ups and downs. Exactly year over year, they're down 20%, just about. They've kind of been anywhere from a $500 billion company to a $1 trillion company. I'm a numbers guy. I like to look at the numbers on this channel, but I'm going to try to not focus on that too much because a lot of this company is based on hype, and so it's difficult to do that. I also don't want to be too negative. I want to try to be optimistic. I'm going to try to not turn this into like a diss track or anything like that. This is not what I'm trying to do here. Looking at this from a technical perspective, because it's funny, the technicals actually matter a lot more than some of the real financial numbers that come up with this stock. One thing that's pretty simple to do is just kind of identify trends. So we saw a downtrend in the last year or so, and they were able to break out of that downtrend in the past month or so. I think Elon Musk was tweeting about the shorts. It rose above this trend. Now it's come back to touch the trend. So this is kind of a pivotal moment. Will it break below this trend line, or can it bounce back and recover? This earnings report says no, but time will tell. Maybe I should just start with the positives of the balance sheet because I might forget. The positives, they have over $30 billion in cash. And I'm sorry if this is hard to see, but I'll talk you through it. $30 billion in cash. That's up from a year ago. They had about $23 billion in cash. What are they doing with all this money? Are they going to invest it in more plants? We're not too sure about that. Are they going to do more share buybacks, a dividend? These things are yet to be seen, but they are just creating this cash hoard because this is a profitable company. So, okay, I talked about some positives. Now let's get into their actual total revenues. $25 billion and some change. Slightly, I mean ever so slightly up from just under $25 billion in the same quarter of the prior year. Almost no growth. And they break it down a little bit further. You see their energy generation and storage went from about 1.5 billion to 3 billion. So that's a 100% increase. Hooray. But really it's their automotive sales of 18 billion that is down from over 20 billion. They don't really even break down their costs of revenues that much, but you could see that they were actually able to cut costs in terms of their automotive sales, right? So typically you would see a lot of expenses. They do cost of revenues. You see that more with manufacturing type businesses, other than the ones that we cover a lot on the channel. So they've been focusing a little bit more on cost cutting, which helps with their profits. However, in terms of net income and their actual profit, again, they actually have declined about 1.5 billion net income. They had a lot more than that a year ago. So less profitable. We're talking about $1.5 billion roughly in profits for the quarter for, again, a $650 billion company. We got $1.5 billion in profit. Again, the numbers don't matter that much. Maybe I should just move on. Okay, these are technically still numbers, but it's a chart. So again, we're looking at a trend here. The trend is your friend until the bend at the end. And that's kind of what this chart looks like. It looks like things are declining. Now, cars are a cyclical business. So again, going into the fall and Christmas is probably the better time to buy a car because you can get the best deals. Are they offering their best deals on Teslas right now? No, they could probably drop the price. If they drop the price, they could probably increase production. However, their margins would get lower. That's something you definitely don't want to see as a shareholder, is their margins decreasing by a lot, because you're already seeing they're even producing less vehicles, down 16% year over year. Their other models are increasing. They have launched the Cybertruck, but in terms of revenues, it's a drop in the bucket at this point. So again, I feel like it's the technical charts that are going to play a little bit more of a role. The next few weeks, months until next quarter are going to be so pivotal for this stock. If you zoom out a little bit more, can they create some kind of more longer term uptrend that ignores some of these little blips? Can they re-accelerate their growth? I don't know yet. It kind of reminds me of Netflix a little bit when they first reported a decline in subscribers. Instead of growing their subscribers, which they had done pretty much their whole history, they said, hey, we've lost some subscribers, and the market freaked out. They went from close to $700 all the way down below $200 in short order. Now they've climbed back up because of their strategy. They said, okay, we're going to lean into this advertising model. They had a strategy. It's up to you whether you believe the strategy or not believe the CEO. The CEO of Tesla, Elon Musk, is focusing on Optimus robots, is focusing on robo-taxis, things that are a little bit pie in the sky from my perspective. You could be really excited about the robot. You could be really excited about having your car go autonomously, be a Uber for everybody else. Personally, I think that's pie in the sky. Personally, I think that they are spending maybe $1 billion per quarter on research. I just don't think that's going to get you an autonomous robot and robo-taxis. I think they would have to really ramp up their research and development and take it more seriously, because it seems to me like they're not taking it very seriously. But you never know. They could have something else up their sleeve. Again, I'm just pointing to some things that I found interesting. Their revenue on geographic area in China, their revenues are decreasing. I wonder if the EV market in China is oversaturated, or if companies like BYD, NIO, XPeng, maybe the Chinese government is tipping the scales to Chinese companies over Tesla, or the Chinese consumer is a little bit over Tesla. That is something to consider. In international markets, their revenue is pretty much stagnant. They talked about some gigafactories in Mexico, India, but they officially paused some of those. So again, when I said, it kind of reminds me of Netflix. In Netflix's case, if you trusted the CEO to reaccelerate growth, you're doing okay. They've climbed back. Can you trust Elon Musk when he's backing a candidate who's promising in his potential administration that he will hurt EV companies? He will take away the tax credits. He will focus more on gas burning vehicles, which Tesla doesn't do. I wonder if there could even be a shareholder lawsuit if the CEO is actively supporting efforts that will hurt his company. I mean, he made the argument that it'll hurt other car companies worse than Tesla, but that's just not a good argument in my opinion. So I'm trying to look for more things throughout the 10Q. I'd be interested in a little bit more of like the margins, right? What's the margin of the Model Y versus the Model X? And they get into some of that, but it's just not in the type of detail that I would like to see. And they can get away with that because, again, the numbers don't matter that much. A lot of this company is based a little bit more on hype. Now, optimistically, that could drive them past some of the things that could be a potential big holdup, right? Like their autopilot and full self-driving crashes and even deaths. They could say, hey, that's on the consumer. They decided to take the risk. Consumers seem to be willing to test out FSD, and they want to have their own chauffeur, but not really pay the same kind of price for having a chauffeur. Right, that's what they really want, and they're willing to test these faulty things as you have to continue to interrupt and brake and course correct, and it'll all be fixed by the next software update. I promise. The next software update will be so smooth. And when autopilot or FSD crashes your car, that's just on you and your insurance. I just wonder how this is going to play out. I think optimistically, the move fast and break things, it worked for the internet. Worked a little bit for Uber. It has been working for Tesla so far. We'll see how long this train lasts. If you're willing to pay this much for Tesla stock, when you saw their revenue numbers, you saw their profits, you're paying huge amounts. You're paying somewhere from 6 to 9 times the amount of revenue that the company has over a year. They make $100 billion in a year. That's fantastic. However, you're paying 6 to 9 times that. We saw they're not growing. They've actually declined. Yet you're paying a trailing PE of 40 to 63 when the average for a good company for the S&P 500 or just the stock market in general is somewhere between 20 and 25. I don't know, but this company doesn't make sense to me. You know what it reminded me of recently? And I'll kind of end on this. At the end of the video, I usually share a secret with you. And I really like the movie Charlie and the Chocolate Factory. I've watched it again recently. The dad loses his job in the beginning to the technology, right? And then at the end of the movie, he gets hired to fix the robot. Right. So it just kind of reminds me of what's going on with Tesla and this Optimus robot. It's like there's going to be a line on your balance sheet for some kind of labor. It's just part of the business. But for some reason, they say we'd rather have it be robots than people. We don't want to pay people's health insurance. We just don't want to pay workers. We'd rather have a robot do it, fix the robot, spend billions of dollars on research and development for the robot instead of just paying workers to help create a good car company. No. It's not about that. So I'm gonna cut it off there. That's the end of the video. I got better things to do than to look at Tesla stock. I'm sorry. I tried to be optimistic, but thank you so much for watching. Let me know in the comments what you think about Tesla, and like and subscribe. See you in the next video.